Hello friends, welcome back to another video. Shopify stock, ticker symbol SHOP, has dropped over 25% since they reported earnings last Wednesday. And in this video, I want to discuss with you my thoughts on why the stock crashed, whether this is a good time to buy, or if there could be more pain ahead. Before we get going, I would really appreciate if you can click the like button and subscribe to my channel, as this will motivate me to make more such videos. So let's take a quick look at Shopify's business model before we get into their financials and valuation. Shopify is primarily an e-commerce operating system that provides tools to merchants to seamlessly integrate e-commerce applications into their websites and allows them to sell their products and services across the world. The company also provides tools and services to facilitate brick-and-mortar retail transactions, and as you can see here, Shopify has continued to add new tools, services, and strategic partnerships over the years to create a really strong brand presence in the digital commerce industry. In the US, Shopify is also the largest e-commerce retail provider after Amazon, based on the gross merchandise value of sales generated using their platform and tools. I think Amazon will obviously continue to be the market leader by far for many years to come, but Shopify can also gain further market share as the e-commerce industry is still in its early stages. Now let's look at some financial metrics from their Q4 earnings report. As you can see here, Shopify's revenue growth has been really outstanding, growing from $673 million in 2017 to over $4.6 billion in 2021. Especially, the revenues have skyrocketed in the last couple of years as more and more businesses turn to e-commerce to deal with the lockdowns. Also, Shopify's business model allowed them to bring in recurring subscription revenues as well as additional revenues from services they offer to their merchants. The subscription revenues have also been steadily growing, as you can see in this graph, from $18.5 million in 2016 to $102 million of monthly recurring revenues at the end of 2021. Shopify also reported strong growth in adjusted gross profit, as this number grew from $385 million to $2.5 billion in the last 5 years. Shopify's adjusted earnings per share for 2021 is $6.41 compared to $3.98 for 2020. So with such a solid performance in the last few years, we are left wondering why the stock got beaten down so much in the last couple of quarters. As you can see here, the stock price has declined over 60% since it peaked around $1760 in November last year and is now trading at $656 at the time of recording this video. There are a couple of reasons for why the stock crashed so much. Firstly, the changes in the macro environment where the Fed has announced plans for a tighter monetary policy in 2022 has led to almost every growth stock like Shopify to decline over 50% in the last few months. In addition, Shopify's guidance for 2022 suggests that some of the tailwinds the company enjoyed during the lockdowns are potentially not going to play out now in the same way, since the economy is slowly going back to normal after almost 2 years of predominantly being driven by digital transactions. This could have led investors to assign a much lower valuation multiple as they adjusted their price expectations to factor in the potential slowdown in growth. As you can see here, even though the sales per share has been steadily increasing over the last 5 years, the stock price has declined in the last couple of quarters, as investors assigning a much lower price to sales multiple of 20 compared to a much higher multiple in 2020 and 2021. The question now is whether the stock could go even lower, which is quite possible if there is a further contraction in the valuation, as investors may only be willing to buy the stock at even lower price to sales multiples, as we can see here with what happened in 2017. This combined with the macro environment could really cause further declines in the stock price. So we have to be cautious about buying Shopify at these levels, even though the company's fundamentals look rock solid. Let's now try and estimate using some scenarios how the stock price could evolve over the next 5 years to try and find a fair price at which we could buy the stock today. So here are 3 scenarios with different annual revenue growth projections of 20, 25 and 30% over the next 5 years. I am also assigning a very conservative price to sales ratio of 5, 8 and 10 to these scenarios, and as you can see here, we lose money under scenario 1, make a modest return in scenario 2 and double our money in scenario 3 if we buy the stock at the current price of $656. Looking at these scenarios, I actually think the company should be able to grow revenues by at least 25% every year over the next 5 years, so there is a very good chance that we may end up with scenario 2 or even scenario 3 in 2026. But given the potential for more weakness and valuation contraction in the short term, I'll not be buying a full position now and will dollar cost average my purchases to try and get to a full position at an average cost of around $500 or $550. Do let me know what you think is a fair price to pay for this stock and whether you're bullish or bearish on Shopify's long-term prospects. And if you liked this video, please don't forget to hit the like button and subscribe to my channel. And as a friendly reminder, I'm not a licensed investment advisor, so always do your own research before making any investment decisions. That's it for now. You have a great day and I'll see you in the next video.